Good afternoon and welcome to this week's edition of Halftime Talk. We're delighted to be joined by Mr. Stuart Williams, President of ICE Futures Europe, Intercontinental Exchange. Hello, Stuart. Welcome.
Hi, Sean. Thank you for the invitation.
Pleasure. Stuart, let's just kick off with the news of the week, really. You're up and running trading a few days now. How has the launch been? How is everything going?
Yeah, thank you, Sean. We're very excited to be up and running eventually. It's been a long time coming, as you well know. We eventually got there this week. So we're very pleased to have ICE Futures Abu Dhabi live. We saw strong interest in the market on Monday. We traded 6,344 lots in the ICE Murban futures contract and 2,510 lots in the related cash settled derivatives. We had strong two-way pricing from the June expiry out to October and trading out to December. So, all around, we were pleased with the launch. Obviously, now we need to build from here. The pricing starts on the 1st of April. So, again, there'll be a lot of interest in the market from then on as well. But overall, we're pleased. We now just need to keep building.
If we could just sort of step back a bit, I know we're beyond the sort of why we should do this. We're now doing it, but of course, the real work starts at this point in terms of building that liquidity and that forward curve as such. What is so attractive about a new Murban contract, and what problem does it solve? What hole does it fill, if you like, that this new contract can help fix?
Well, I think we need to think about this contract in the broader context of what ADNOC is doing. And of course, as you know, Sean, ADNOC has lifted destination restrictions on Murban, on their other grades. They've indicated that it's now up to the market to decide what the value of Murban is. And again, for the other grades, they'll be priced at an announced differential to Murban. So what is now kind of in the market is a need for the ability to contribute to that price formation process, and a need to be able to hedge that forward price risk. So in a sense, the futures contract is providing that ability for the whole marketplace to determine what is the right value of Murban, or indeed the other ADNOC grades, and then also to manage that forward price risk. And what we see from an exchange perspective, and this is what really makes us excited about operating markets, is that markets provide the ability to manage price risk, to create value around the valuation of a particular asset. And what that does for firms is it provides the ability to allocate capital and to be more efficient in the way that they operate their businesses. So from our perspective, as we're speaking to Asian refiners, to producers, consumers that have a nexus into Abu Dhabi oil, we're talking about how they can use this contract to help manage that price risk, and also to then be more thoughtful about future investments and about the way that they allocate their capital.
You mentioned earlier, Stuart, that about the idea of, yes, in the first few days of trading, we had some contracts out on the forward curve through to December. How important is it to get that forward curve built out, and what will it need to do in order to get that done?
Yeah, so a futures contract isn't just about a delivery mechanism, and so we would consider it to be important to the success of the Murban futures contract to have a decent forward curve. And so absolutely, that's one of the key focuses for us. And again, if we go back to what I was saying just now about the importance for firms and the way that they'll use this contract to help manage their price risk and to allocate capital on a forward basis, clearly building that curve is going to be important. So we're very focused on that. And as you will know, Sean, one of the things that we're doing is inputting the contract alongside Brent and providing the ability to trade that Brent Murban spread, is where we have the ability to lean on the forward liquidity that we've got in Brent to help bring some of that liquidity into the Murban contract and start building that forward curve.
Will you be relying a lot on the physical traders, the customers of ADNOC to get this contract up and running, or will you be looking to the financial markets, investors to come in with the paper? How do you think it builds out?
Well, it's both, Sean, and this is again the beauty of a futures market, is that it's it's a pretty low cost to entry for trading firms. It's the ultimate form of democratization of markets. So yes, we're definitely relying on our partners and the physical players and those that have physical exposure to Murban and other ADNOC grades. But equally, we're bringing in the financial community who are very experienced in managing risk across a curve, in providing two-way markets, and really bringing those two constituents of the market, if you like, together around Murban futures. And that really is the proposition. So we're right now busy working to try and increase the numbers on both the physical and the financial side of participants that are coming to the market and contributing to that growth.
Does it matter that the financial center, obviously the ICE Futures Abu Dhabi is in essence Abu Dhabi, but inevitably it's a virtual world in so many ways, but that the centers of trading in the world, Singapore, London, New York, are physically separate from this geography? Does that make a difference? Is it a plus? Is it a minus? How do you see those two things coming together?
Yeah, so right from the outset, when we started building ICE 20 years ago, the idea was we'd bring the best of local regulatory environments so that our customers could trade in a regulatory environment that they knew and trusted, but also with the ICE trading platform being a globally distributed platform that all of our exchanges on, really embracing the idea that electronic trading is about global access. It is about bringing constituents from across the globe together. It is about building this network, this connectivity. And so for ICE Murban Futures, ICE Futures Abu Dhabi is based in ADGM, as we all know. It is a regulator that has really come on leaps and bounds over the last few years, and is now an entity that is known across the world. As you will know, ADGM is also based on UK English common law, which as a system is recognizable to many. So much of the global trade is done under English law in a common law system. So from that perspective, ADGM and the legal and regulatory system around that is known and trusted. The FSRA as a regulator has built great connectivity with a lot of the global regulators before we came into the picture and while we've been building this project out as well. So from a trust perspective in the regulatory system, we see that is there. But then to your other points, of course, ICE Futures Abu Dhabi is hosted on the ICE trading platform, which has that global connectivity. And so from a customer perspective, connecting into the ICE trading platform, it doesn't really matter where they sit. It is about that global community and that network.
I mean, ultimately, do you see this as a pricing reference for the East of Suez? We've got WTI in the US market, Brent, of course, out of the North Sea, but essentially a price reference for the world. But ADNOC or the Murban contract, which emerges obviously just this week for the first time, but becomes essentially a price reference for a geographic region east of Suez. Is that, in essence, its principal place in the market?
Well, that's exactly right. I mean, that's where we think it fills a bit of a gap at the moment in the lighter, sweeter side of crude. Of course, there are other instruments, as you know, and we've got a lot of Dubai trading on ICE as well. But we think this does have a specific role to play in that east of Suez pricing, which we haven't had up until now.
What will success look like, Stuart, in, let's say, 6 months, we're at the end of 2021, against its ability to attract liquidity into the Murban contract? What would you think would be success? You mentioned at the off there the open interest at the first few days of trading.
Yeah, so we obviously just want to build from here. We've got trading in 6 months out. We've got upward of 25 participants active in the market on day one. So success for us is building from there. It'll be about building the forward curve. It'll be about building the open interest. It'll be about building the participation and ensuring that we have participation that covers the full range of time zones that trade on the ICE platform.
What does that mean exactly? I mean, when we're talking about adoption of the contract, you expect every refiner in Asia to be using it. I mean, what would be some tangible examples of that on the ground? We've seen you sign different agreements with different off-takers in the last few months.
Yeah, sure. And I mean, from a refiner perspective, yes, we definitely want to see greater adoption from Asian refineries. As you will know, there are many Asian refineries that haven't really, as a matter of practice, hedged a lot of their crude imports. Some of that has been because the instruments haven't existed. Some of that has been because the pricing of the crudes that they've been buying, have been based on set OSPs rather than on market-based pricing. So yeah, we're out there certainly with the Asian refining community, talking to them, and we are seeing that many of those refiners are becoming a bit more sophisticated about how they think about hedging and about trading. So
I mean, it's obvious where ADNOC customers would use it, but beyond that.
Yeah, so look, I think we will be looking to see what other utility the contract can have. But Sean, right now we're focused on building the contract. We're focused on building there's still more to go on the existing community. So we want to build that first.
Does success also need the regional producers beyond Abu Dhabi to also use this as a reference in their pricing?
I don't think I don't think success, is dependent on that, but I think that will certainly build further success. I think we believe we can build a successful contract with the ADNOC crudes referencing this contract directly. But of course, we want to grow from there. So we'll be looking at that in due course as well.
And in that sense of what should open interest look like, do you think, a year out?
Well, I think at the very least we'd like to see OI, equivalent and more than equivalent to the physical barrels that are going to be priced against the contract. But I'm not going to be drawn on a particular number. I think we'll just keep building and work hard to make sure that OI grows.
We're coming obviously into an era, as the last few years, where U.S. crude oil is coming into the east of Suez market. Is now U.S. exporting about 3 million barrels a day. Where does this contract intersect, do you think, with the U.S. crude coming into the east of Suez market?
Well, it's interesting, Sean, because really the additional competition brought by U.S. barrels coming into Asia was, we think, one of the reasons why the market started to look for alternative options around pricing. So that, in a sense, has helped to create some impetus to the whole project. But we also think that because Murban is a much more similar grade, if you like, from a lighter, sweeter perspective to WTI barrels coming in from the US, we think that provides perhaps a better pricing mechanism for US barrels going across to Asia. So we do think there are options there. As you know, we've signed some MOUs with some US exporters. So again, we'll be developing those conversations now that the contract's live.
And in that regard, will the new contracts give Asian buyers a way to hedge against purchasing of physical US crude?
Yeah, so look, I think at the outset, it provides that price transparency. It provides the ability to compare barrels of a similar quality coming out of the Middle East compared to out of the US. And then, once you've got that price transparency developed, then I can see Asian buyers using the Murban futures contract to start hedging some of that crude as well.
And from the point of view of Saudi Aramco, obviously the biggest exporter in the east of the world, never mind east of Suez, but ultimately we saw them in recent years adjust their pricing mechanism. They used to be Platts Dubai, Oman, and they've blended in with some DME pricing. Are you engaging with them? Are you having conversations with them about this, proposing the value benefits? What's that kind of dialogue look like?
Well, Sean, of course, given our broader presence in the oil market, of course, we regularly speak to colleagues at Aramco and to other producers as well. We did that even before we launched Ice Murban. Now we have another conversation to continue having in that regard. As you all know, the Saudis price their crude imports into Europe against B-Wave, which is a nice product. So those conversations will continue to develop, and we think now there is another tool in the stable that we could offer those producers that will provide value from a pricing perspective.
On the other side of the coin, of course, you've got the biggest demand center, the biggest customer, which is China, for east of Suez crudes, a lot of it going towards China. They have their own Shanghai contract. How does this complement, coexist alongside that? What's your thinking there?
Yeah, look, I don't think, from our perspective, There are some challenges associated from a currency perspective, from a rule of law perspective. ICE Futures Abu Dhabi clears into London alongside a lot of the other international crudes. So we think that provides a benefit. But more broadly speaking, Sean, our view's always been that that these products are really complementary. The ARB will provide some additional benefits and indicate where crude needs to flow. So if the ARB between the Murban contract and the INE contract opens up, that's where it'll flow. If it closes down, it'll flow somewhere else. So I think all of these pricing mechanisms again are providing optionality to the marketplace, which ultimately is good for producers, consumers, and refiners.
Well, Stuart Williams, President of ICE Futures Europe Intercontinental Exchange, thank you so much for being on Halftime Talk this week, and best of luck to your success with your new exchange and new Murban contract. And we hope it achieves all the things you're wishing it will.
Thank you, Sean.